Ladies and gentlemen, we're going to present our analysis and valuation of Детский Мир, the largest retail operator of children's goods in Russia. We issue by recommendation. The valuation we arrived to 137.84 ruble target price, assuming 38.46 upside from its January 11th closing price. Its potential upside is based on the Детский Мир leading market position, essential growth, cost reduction, and operating efficiency strategy. Now, we go through key investment highlights.
Детский Мир successfully operates on the market for more than 60 years, creating great memories for adult customers since its origins. As we mentioned, Детский Мир is the biggest retail operator of children's goods in Russia, and the only one that is a public company. Детский Мир combines national retail network of Детский Мир stores, retail network Early Learning Center or ELC, and online stores of the shops. Детский Мир stores offer the widest range, about 20-30,000 positions of products provided for children from 0 to 12 years, like clothes and footwear, goods and food for newborns, toys, products for early and school developments, and others. Детский Мир market share is 17% of whole children's goods market and 44% among specialized brand stores. Main competitors are Korablik, Dochki-Synochki, Mother Care, and Begemot. Детский Мир controls the largest number of selling points that constantly grow. It is present in most regions and has the largest average selling space per store.
Now it's time to briefly outline the key features describing Детский Мир's financial performance. First of all, Детский Мир's revenue has shown a consistent double-digit growth since 2011, when the company first launched its online store. Moreover, despite the macroeconomic crisis and the decrease in the purchasing power of the population, Детский Мир has reached an increase of its revenue by 33.2% and 31.4% during the difficult 2015 and 2016 respectively. Company's EBITDA had a stable increasing trend during 6 years, and due to both stabilized macroeconomic conditions and competent retail concept, we are facing a significant 63% growth by the end of 2016. As Детский Мир still follow the principle of continuous selective expansion, we expect more or less stable growth for the main income statement indices in the next 3-5 consecutive years.
Moreover, Детский Мир successfully realized cost reduction and operating efficiency strategy. As a result, company reduced selling and general expenses share in revenue from 29.8 to 25.7% in 2014 and 2016 respectively. Also, number of tickets increased by 11.4% in 9 months of 2017 compared to the same period of 2016. In addition, company grew revenue per shop by 7.3% during 3 years. Детский Мир is resistant to crisis and has stable revenue growth, unlike its competitors, that will help company to take bigger market share in the future.
We used 3 different methods to derive target price: discounted cash flow, economic value added, and comparative valuation. Let's take a look at our valuation. Our valuation based on 2-stage growth model. The first stage is a specific year-to-year forecast up to 2022. The second stage was calculated in 2 different ways, based on 2% constant growth and 6.56 EV/EBITDA multiple. Based on average of these 2 approaches and adjusted by liquidity discount of 10%, the estimated price is 135.58 ruble per share. The key factor for DCF valuation is number of stores. We made research that corrects slightly optimistic management expectation of 300 new openings. We assume that the company will be able to open only from 160 to 200 new stores, so total shop count may rise to 760 shops. Cost of capital was estimated as a weighted average cost of capital, or WACC. Cost of equity was calculated through capital assets pricing model. As a risk-free rate, we used 10 years Russian government bond rate equal to 7.2%. Beta for Детский Мир is 1.2 as per Bloomberg's data, and market risk premium was defined to be 9.25%. We obtained a cost of equity of 18.29%.
In order to stress our analysis, we performed 10,000 scenarios of Monte Carlo simulation. For this, we tested the variable related to revenue, such as population, income, and birth rate in Russia. Based on the Monte Carlo analysis, there is 38% probability that share price will be lower, our forecast of 137.84 rubles, and 62% probability that it will exceed our forecast.
We derived the EV/EBITDA as a pivotal multiple, as it's more applicable when assessing a company that operates in retail industry and has a significant portion of a geared capital combined with the complex structure of financial leverage. The PE multiple was, by the way, adjusted with size premiums and country risk premiums for foreign companies. We also use different weights for selected peers, depending on the extent they fit Deskimir through various characteristics. Negative and peak figures were deleted from the sample as well. The final implied target share price we've got from weighting the EV/EBITDA and PE values was adjusted for the liquidity discount of 10%. To complete our analysis, we have to go through main risks for Deskimir. Decrease in disposable income of the population caused by contraction in economic stability can essentially affect sales dynamics. Despite of the fact that the market of children's goods is one of the least sensitive to deterioration in the economy, the fact that uncertainty of future incomes and the number of childless families in families with one child is increasing rapidly. Reinforced competition. Intensification of the competition in retail sector and raised pressure from food retailers and online stores can lead us to a shift in the balance of power in the market.
As the majority of goods is imported, depreciation of the ruble may lead to both growing prices of the products offered by the chain and declining demand from the customers. In order to mitigate the risk, Deskimir continues increasing the share of nationally produced goods in the assortment and follows a flexible pricing strategy. Company's current assets do not cover short-term liabilities that could lead to the slowdown of the retail network, disruptions in operations, and need for additional financing. According to previous results, we also worked out sensitivity analysis of our share price calculation. The analysis has shown that by changing growth rate and weighted average cost of capital, share price is supposed to fluctuate between 128.5 ruble per share to 154.2 ruble per share. According to company's market leading position, essential growth, cost reduction, and operating efficiency strategy, we issue buy recommendation. Our valuation assumes that target price is 137.84 ruble per share. Deskimir shares will increase value for investors and has 38.46% of upside potential. Stock is very protective and assumes 62% probability that it will exceed our forecast, so we are very confident of our recommendation. Thank you very much for your attention.